Their opinion of cryptocurrency, as strange as this sounds, is based on the headlines they read. They almost all have the same questions. They just ask them using different words and in a different order. But they all have the same questions. We all have the same fears. No one wants to put their money in it because it's not safe. Well, is your money in a bank? Don't tell me this is as safe as a bank. It is already connected to your bank. You probably would have about $50,000, even though you spent $5,000. A lot of people have this misconception. There are a lot of them. Bitcoin's too expensive. I can't buy them. They don't understand that it's fractionalized. You can always buy $10 worth. The questions people ask, you don't need to know how this works. You just don't. I think we could all agree. Most people don't care how their cell phone works. They just want to know how to use it.
All right, I think we did it. I think we're live now. So hey guys, Mike Healy here. Obviously, I'm on my page, my Facebook fan page, and I had a lot of people have been asking me about different business things. One of which has been the cryptocurrency market, because it's all the buzz now, or at least it is becoming really interesting, to say the least. You've got people on this side of the fence that think it's a complete scam, and you got this side of the fence that people are so far in. It's just amazing, right? And I was recently introduced to this gentleman right here, Joe Podestivo, who I kind of look at this scenario of why I wanted to introduce you guys to him was I'm kind of like Luke Skywalker looking for somebody who knew what the heck they were doing. And I found Yoda, okay? And the reason I can say that
Yoda.
is, Yoda, much better looking than Yoda, but it's been amazing. I was asking a friend of mine who has been very successful in the industry, or in business that I've been part of for years and years and years. And I said, how are you doing this? Like, how he told me the kind of money he was already pulling in returns with what he was doing, trading and investing. And I was like, wait, what? What's going on? And he told me about a training that this guy, Joe Podestivo, did, the guy I got right here, that you put together. And I went and got it real quick, and I was like blown away, that kind of thing. But Joe, you got I want the people that are maybe jumping on to watch this. I want you to explain to them, first off, a little bit about your background, but how you got interested in crypto. And you've come across people that ask the same type of questions that I was asking, that everybody asks. And I really think you've put it in a real simple terms that people can understand it. And I've been so excited about it. I can't sleep anymore because of what the potential is here. So Joe Podestivo, say hi to everybody, kind of give us your background and tell us a little bit about what you got here.
Hello, everybody. So let's try and keep this. I don't want to waste any time on me. So out of high school, went straight into the Air Force, did rescue, went into a union job, Local 1, where I went to trade school and learned literally every trade, because I was in the elevator trade. So I had to learn everybody else's trade as well. And this new thing coming out called microprocessors, right? I'm glad I took that seriously, because that really paid off with cryptocurrency. But the truth of the matter is, to segue right into the questions people ask, you don't need to know how this works. You just don't. So, as someone who does like to understand how technology works, I think we could all agree, most people don't care how their cell phone works. They just want to know how to use it. What are the benefits of it? Crypto is the same. A lot of people have this misconception. There are a lot of them. Bitcoin's too expensive. I can't buy them. They don't understand that it's fractionalized. You can always buy $10 worth. Doesn't matter how expensive it gets, you can get $10 worth. They don't understand that cryptocurrency, each one is a separate project. So while Bitcoin is being used as currency, because anyone who's willing to accept it as a currency, that's what makes it a currency. So to hear a debate on whether or not it is or isn't is insane. If someone's willing to accept it, then it is a currency. But the difference is this particular currency has a limited number, which means anything that has a price on it, that price is based on supply and demand. So if you put a limit on a currency, all of a sudden it becomes an asset. So I guess one example I like to give in that is, people don't realize that they're going to be using blockchain technology, and blockchain is how Bitcoin is delivered. And that's what makes Bitcoin special. Make no mistake about it. Blockchain is special because you can deliver information securely. That's really all it is, which means you can secure a ledger and it can control it. So if you can send an email and receive an email, you can trade cryptocurrency. I say that to people and they scratch their heads. So I don't know how much time you're going to give me for these answers, but I want to give you a quick scenario. Most people understand how Google works, or they think they do. If you had a Google account, I had a Google account, it would end with Gmail, right? So if I sent it to you, does it go directly to you?
Yes.
No.
Well, it goes through.
It goes to Google, right?
Goes to Google, and then
a central authority, just like a bank is a central authority for their transactions. It goes to Google, and Google says, hey, this guy Joe, yep, this is legit. And hey, this guy Mike, he's legit too. And they push it through. If you weren't legit, I would get an email back saying that the address that I put in is not legit, right? So that's a central authority. Cryptocurrency is decentralized. So if I sent you a Bitcoin, does it go directly to you?
Yes.
Nope, doesn't go directly to you. You're
That's why I had to ask you all these questions.
It goes to anyone who. So let me back up a little bit. To get your Google account, Google had to give you permission. Let's just say you couldn't just get it; they had to give it to you. So they gave you permission, right? They asked you for some information, and boom, you have this unique number because they are a unique layer on the internet. That's all they are, is a unique layer on the internet. So that anytime we send anything, it goes back and forth. Bitcoin is nothing but a unique layer on the internet. But the difference is it's a secure layer. Google's not secure. Nothing in the internet is secure unless it goes through some form of. That's why there's all kinds of hacking, and people are concerned about Bitcoin getting it. Bitcoin's never been hacked. Make no mistake about it. That's another misconception.
How many years are we into Bitcoin now?
2009.
2009 was when it came out.
And it's been on the open market for the world to hack. It can't be hacked. There is no backdoor into a ledger. So all it is, if I could explain this right in its simplest form, is it's data. It's information in a block. And once that block closes, so when I send you Bitcoin, what's happening now is all of our computers are connected to each other around the world, every Bitcoin wallet, right? So now it goes out, and the people who are doing the mining, who have downloaded it, it looks at me and it says, hey, this guy Joe, he does have a legitimate address, and he does have this amount of Bitcoin that he's trying to send in his wallet. And then it looks at you and it says, you have a legit address, right? Permissive. They gave us permission because we downloaded the information. So just like Google, we have permission, we're permissive. And it looks at you and it says, you're legitimate too. It allows it. It says, yes. That block closes. That's one approval. That takes about 10 minutes to happen. That has to happen 6 times with Bitcoin. So someone else gets that information with the approval in there, that block. And it says, okay, so he already approved this. Yeah, Joe is legit, Mike is legit. I'm going to approve this. It approves it on top of the other block. Now you have 2 blocks connected, thus the term blockchain, and it just keeps going. Once it has 6 of them, it's approved, and the ledger has the ability to take it securely from me to you. That's a huge problem that Bitcoin solved through blockchain, right? Through cryptography, which is all cryptocurrency is, right? So now that it had the ability to do that, that money sits in your ledger. So let's talk about that for a second, because we already said that the value of something is based on supply and demand. So let's switch this. A lot of people have a credit card in their pocket. We'll say that they have a debit card. In the example, I'm going to try and talk to the people instead of you on this, Mike. Okay. I'll talk to you as well. So if you had 10,000 American dollars, $10,000 on a debit card, and in the course of 12 months, you spent $5,000, what would you have left?
5,000.
Plus maybe 1%.
Maybe.
Right? And every transaction you do is going through your bank, the credit card's bank. Depends on how many banks are involved on both sides of the transaction. Okay. Mm-hmm. If you had $10,000 worth of cryptocurrency, right, on a debit card linked to your cryptocurrency, right, $10,000 worth of cryptocurrency, and you spent $5,000 in the last 12 months, what would you have left?
The math would say 5,000, but based on the percentages I've seen it go up, it would probably be way more, right?
You probably would have about $50,000, even though you spent 5. Depends on the asset that you had connected to it. We have some assets that are up 4,000% in the last 12 months. And that's the key ingredient that people have to understand that they're passing up when they don't get involved. And here's the caveat. They're going to be using blockchain, period, within 5 years. They might not know it, but whether they're streaming anything on a laptop, anything streamed on a cell phone, any exchange from a credit card, everything is going to go through blockchain because it's secure. The different individual projects that come up are different individual cryptocurrencies. This company over here has created a layer on the internet. This next one created its own unique layer on the internet. Then along comes another company that connects those two layers, and it's connecting all of them so that they can all communicate with each other. And they're building a secure internet. That's really all blockchain is doing. So obviously, every business in the world is going to switch. They are already switching. A lot of them have already switched. There are billions of dollars going into for connectivity, for ease of use and transmissions. So the thing is, when Bitcoin was able to do that in one day, what used to take banks 3 to 5 business days, and the next coins that came out, like Ethereum, another unique layer on the internet, but a secure one with what we already know they call smart contracts to allow things to be able to communicate with each other. They code the law of the land in and allow you and I to do transactions with no middlemen. And again, the limited number of it and the use cases, because they gave basically they gave it away, and people are building their projects on top of Ethereum. So they're called tokens, right? We talked about this before. So that's a huge problem that they're solving. They're allowing every company in every industry to come into the crypto world and not have to spend millions of dollars on coding, because they're using their foundation to build their layer on top of Ethereum. But every time there's a transaction, Ether transfers back and forth. So for us as investors, it's a great investment. You asked about, I think in the beginning, you said something about things that people are worried about. Most people that we talk to that sit in front of us, especially for the first time, their opinion of cryptocurrency, as strange as this sounds, is based on the headlines they read.
Yes.
It is. It honestly is. So they almost all have the same questions. They just ask them using different words and in a different order. But they all have the same questions. We all have the same fears. No one wants to put their money in it because it's not safe. Well, is your money in a bank? Don't tell me this is as safe as a bank. It is already connected to your bank. They don't realize that. Well, what makes your bank safe? It's FDIC. Cryptocurrency is FDIC. It's already connected to your bank. It's already regulated by your banking system and the country, the United States of America. Or it wouldn't be in your banking system. You wouldn't be able to do a transfer from your checking account into your crypto account and back and forth. So, but I heard that people, they lost their money. They put it in a wallet. And this is another problem. Misinformation. People are telling you, you want to have control of your wallet. So you should have your own wallet, like a thumb drive. If you lose that thumb drive, there is no way to get it back. There's no way to get it back. But if you opened up a Coinbase account and you forgot your password, Coinbase will help you get your new password.
Right.
If Coinbase gets hacked and they take your cryptocurrency, it's FDIC.
You said I think this stuff is fascinating, because I think there's a lot of people that they kind of they look at, I forget the analogy I know what it was in the training course that you did. And you did an analogy of the bathroom of the first guy to put an indoor toilet in his, in his house, which I thought was funny, but it was such a good analogy. Explain that real quick. My
favorite analogies. I know everyone says I shouldn't use that, but I don't care. I enjoy telling this story.
I remembered it because it was unique.
Yeah. So imagine how insane everybody thought the first guy was who wanted to put bathrooms in the house. I got this great idea. You're not going to have to leave the house anymore. You'll be able to go to the bathroom in your house. And his neighbor's like, what a moron you are. Why would anybody want to take a crap in their own house? Your house is going to smell like crap. It makes no sense. It's the stupidest idea I ever heard. Well, that winter, that gentleman had to go out to an outhouse and freeze his butt off and think about, wow, that guy's got a bathroom in his house. I wonder if there's a way that we could do this. Maybe I could just put it closer to the house. And then all of a sudden, people were building houses, and they decided, you know what? I want it in the house too. I want it in the house. I want it in the house. And a strange thing happens, right? Critical mass happens. All of a sudden, the switch clicks and it's over. Critical mass is believed to be, we'll say 1/3. When 1/3 of the people are involved, everybody automatically wants it and believes in it. Where are we now with crypto? This year, If we believe the numbers, we're at 8% this year, which means next year, if it keeps doubling and the numbers stay the way, it'll be 16%. Where will it be the year after that? Critical mass at the end of that year. So
Speaking
we're
of,
a couple of years before critical mass. So now is the best time to get involved. We're in the
and
beginning of the
you do these so in the group that I became part of with what you do is you do these Facebook lives where you go in and show what you're trading, what you're doing, and it's absolutely fascinating. But I thought it was kind of cool yesterday where explain you showed all of like the number one companies in the world of their value. They're like, I guess you call it the market cap, right?
yes.
That the market cap, and then you showed some of these cryptocurrencies that are literally just a couple years old that are almost or bigger than what we would call like established world-renowned companies. They're just
Coca-Cola,
watching it. What's
Exxon.
that?
Yeah, Coca-Cola, Exxon, tremendous corporations that have been around for decades. And we have cryptocurrency projects blowing them out the doors, just way bigger already. So what I was trying to do and what I try to do, and what makes our course different is we believe in the psychology of how we think as humans. And in all the courses I've been trading for myself for the mid 80s, I've taken so many courses, but I've never heard or seen anyone teaching what really I think you need to know to be a successful trader. Because most of them are services that want you to stay with them, and they won't give you the quote unquote secret sauce. Here, we're about teaching you the secret sauce and making sure you understand it and digest it, but not putting you in a box. We don't care if you trade the way we trade. We teach a formula that anyone can follow, but you can put the parameters in. We teach how to adjust it. One of the questions that came in yesterday was, if I'm holding something and I'm going down, so what are we trying to do? We're trying to teach awareness of how investors are losing money in a down market and traders are making money. So you can decide what you want to do, but know what the pitfalls, pros and cons are, right? They're very simple. The difference between the two is literally 15 minutes a day. The investor who's losing money in this down market could turn that around by investing 15 minutes a day in himself, not in us, in himself, in learning how to draw the lines. That's why we teach people how to do it. We don't want them to need us. So it's the theory of, instead of feeding a man a fish and feeding him for a day, teach a man to fish and feed him for a lifetime. We believe in that theory. So how would we keep a subscription base if everybody knows what they're doing and they leave us? Well, it comes down to value, like it always does. It's about value and staying on the front line. They keep coming out with quality cryptocurrencies. It's impossible for me or any one person to stay on top of this. But as a community, some of the assets that we trade came from students. They're not from me. Well, but we have criteria, and I always keep it right here, our criteria. Once it meets our criteria and we trade it, then it's just a matter of meeting our criteria to start actually making the trades on it. So in other words, we don't trade every asset. We only trade very specific ones. There are, I don't know, I think someone said between 4 and 10,000. Depends on where you look, how many assets there are in the crypto space. We trade 20. And of the 20, we don't even trade them all. Some of them are long-term holds.
And I've watched, and maybe I'll share what the training that you and I did together, where I said, okay, give me the step-by-step process. Show me exactly what I have to do. What am I looking for? And it was really this massive aha moment when you showed the patterns of what you track. So you're not guessing, because most people are doing what they call FOMO, the fear of missing out,
right,
based on headlines, which is what you said. But when you start to actually get a legitimate education on what's going on in this space, and then you have identified kind of your formula of showing it, and we went through it, it was so much easier for me to just look at something and go, oh, this is going to do this now. And it's been doing that. Like I've been able to go through and look at, like the little chart stuff and realize where the patterns have been, for years, since 2009, they basically have started creating patterns and capitalizing on those. I mean, you've obviously mastered it. You are now the Jedi master of mastering those patterns. But it's pretty incredible.
Yeah, and to your point, the old saying says, failing to plan is the same as planning to fail, right? most of the people that trade in the stock market, I found this fascinating. Because I worked in Manhattan, my portfolio was in Manhattan. So for a period of time, my portfolio was downtown Manhattan. So I worked among a lot of these guys who, when they retired, they don't trade for themselves. What does that mean? I used to scratch my head. I'm a guy who questions everything. I'm also a guy who I want to know how everything works. I love technology. So I have to stay on the forefront. I'm going to do that till I die. So sharing that information with everyone, that works for me. And the other guys, the other lunatics like me, guys and gals that like staying on top of it, we form a bond. We share information. We throw things at each other and we challenge it. And we try to take these projects down the road to see which ones are going to be the giants, the ones that are going to be bigger than the biggest companies in the world. To your point, what we showed yesterday should have opened some eyes. And again, it's the whole ball of wax. The headlines are meaningless. The headlines are following the charts, not the other way around. It's not this guy said this and it went down. It was already going down when he said this and it just went down further. But when you look in the cycles, there's only one anomaly in Bitcoin since inception, only one: COVID. It went down for 2 weeks. Other than that, it did exactly the same. It's a 4-year cycle and it just keeps continuing to do the same thing. All we do is trade based on this formula, not guessing, to your point. So when you understand how to draw a trend line and it crosses the trend line, you know to buy or sell. That's all there is to it. But we know our sell price before we buy. And that separates us because most traders don't take profit. They fall in love with the asset, just like stockbrokers I shouldn't say stockbrokers. Most stockbrokers sell you what their company tells them to sell you, but they don't know how to do it themselves. Some of them do, but most of them don't. They only know to tell you this because they get paid on the buy and the sell, on the volume.
Right.
Here, another quick example. Someone is getting involved and he wants me to tell him the first trade that comes up. And he's scratching his head. We didn't make a trade in a couple of days. So in the last 7 days, there were 2 great trading days. One was in the stock market. The other one was in crypto. Between the 2 of them, I think we did 12 trades. That's 12 trades in 1 week. Knowing that we teach a formula that if you can make one successful 6% trade per month, that's over 100% profit every year. 6% trade. We did 12 last week in a down week because there really were only 2 good trading days. And it's formulating to be one coming up again. The key is you don't have to keep repeating the research. You're using the tools to draw the lines, and then at a glance, it didn't reach it. Next, it didn't reach it. Next, it didn't reach it. I'm done in 5 minutes. Oh, I don't want to sit in front of a monitor. Sit in front of a monitor. If there's nothing happening, I'm done in 5 minutes. If something's happening, I'm done in 10 minutes. Because we teach a formula I personally like to trade in the morning and in the evening. So I only have to ask myself a question for 12 hours from now. Is this going to go up, go down, or stay the same 12 hours from now? If the trend is going up, and I like to use the example, if it's close to what I want on my sell, so in other words, my profit, and I have a really busy day ahead, I'm selling it and taking the profit. See you later. I got my money. Once I get it, you never get it back. That's the theory. If I have the ability to look at the phone a couple of times and it's close and I think it's going to keep going up, I'll let it go. And I'll look again in an hour. Maybe I was right, maybe I was wrong, then I'll sell then. It doesn't matter because we're talking about a trend that tends to keep following itself. Now, there is no control over the future, and the past is not indicative of the future. However, when something consistently is following something, and you're following that formula with your risk management included in that, which is why we do the liquidity trading that we do, you protect yourself. And we're doing this in a down market because we believe that this is the last year of a 4-year Bitcoin cycle, which means next year technically should be a down year. So if you don't know how to trade in a down market and you're an investor who's just going to hold on, it's the same as looking at 17 when it went up to $20,000. What did it do the next year? People who held it all the way down to 3,800. That's insane. If they knew what they were doing, they would have pushed it into a stable coin as a protection asset and then stayed out of it. But to do nothing but let it go down is just lack of knowledge.
Right. And so what I'm going to do is, you and I did that one training. I'll probably put a link around to this video or somewhere. That way people can go view what we did, like literally the hands-on walking somebody through how we trade, how you look at those patterns, which is part of the course that you've been giving and putting out there for people to, not giving, but that you have, along with the Facebook group. I mean, I think the value in being part of the community that you put together is where everything's at, because you got the regular things that you post in that group. You've got you do those live trades, so I can watch over your shoulder. It's really, really unique, and things like that. So Joe, any closing comments on here? I know we've been on probably way longer. We actually I said, hey, I want to tell people that I met this guy, Mr. the Crypto Yoda for me. And I said, hey, we're going to be 5 minutes, and here we are 25 into it. So, but it goes fast, because, when you get excited about this stuff, the upside here is just insane. Like, it is absolutely insane with what's going on. And, with the, crazy spending that the government's doing, with what we're seeing with with the gold and silver being purchased up, and now you've got this space. It's literally like people people have to diversify. They've got to take, you can't just go with the flow. You have got to figure out how to diversify your accounts, protect assets, protect what you work for, your wealth. And this one's not going backwards. I don't care what anybody says. Crypto is not going away. It's literally the argument of riding a horse since the inception of mankind, until Ford decided to say, hey, there's a faster way we figured out. People literally said cars were not going to work. I remember, I am old enough, I'm 53 now. I am old enough to remember when the argument was the internet wasn't going to work.
I remember that too.
Do you remember that? I mean, we were on dial-up, and people were like, people aren't going to use this stuff.
Yeah.
And think about that. And that's where this is right now. I know that that's where crypto is at right now. And to be on the forefront of this, to be kind of early cutting edge of this is just amazing. Where do you see this thing going?
Well, you just made a very interesting point. What those two things had in common. And if you remember, the automobile is another one of the analogies that I use. They thought he was crazy. My horse, I just put shoes on, he walks, and no big deal. This car, no one knows how it works. No one how to fix it. No one can get gas. No one can get fuel. There were a lot of problems with it. But what they had in common, the computer and Ford, is there was an established number that when you get this cost under $1,000, everyone will have it. It'll be a household thing. But and I'm glad you brought it up, because it brings up a great point about cryptocurrency. People think they need a lot of money to get involved in cryptocurrency.
Right.
They can get involved with cryptocurrency for $20, $30, $40. What's the right amount? It's up to you. You know what I mean? I think the right amount, if money is not an object, is $5,000. If money is a little bit of an object, if everyone can scrape up $500. If you can scrape up $500 and you can start doubling it, you're on your way, because, take a calculator, take $1,000 and double it 10 times. If we can teach you how to start doubling your portfolio, and people don't realize, if you take $1,000 and you double it 10 times, it's over $1 million, because you learned a formula that keeps doubling. You have to just keep applying the formula. We don't know how long it's going to take. We know, obviously, in a bull market, we double it faster than we do in a down market, which is why we preach trying to do one successful 6% trade a month. One. The funny thing is, what are you getting in your 401k and your annuity? And this is what kills me. 401ks, annuities, and pensions are not safe. They're not safe. I hear people say, well, I guarantee. There is no such thing as a guarantee. There is none. I don't read the small print of whatever it is you think is guaranteed, and you will find out. I'll give you one example. 2008, everyone's annuities, 401ks, and pensions were wiped out. Wiped out, eliminated, gone. What most of them mean by there's a guaranteed payment is, in an example, if enough money is coming in for your pension to pay out, then you're fine. You may even get increases now and then. And I like to use 3 codes, red, yellow, and green, because that's what my union used, 3 codes. And we were in a code yellow for a decade. What did that mean? How did we get in that code yellow? Well, green meant enough money was coming in to make the payouts and maybe some possible increases now and then. Yellow means enough money didn't come in for any increases, so everything was frozen. So there was no increase for about 10 years. What does red mean? Red means there's not enough money coming in and there's not enough to pay out, shut it down, and reword it and reevaluate. What does that mean, reword it? So if you were supposed to get a pension of $5,000 a month for the rest of your life, and it went code red, when they reword it, maybe you get 2,000. You get whatever it says you get. And if it goes code red again, maybe you get 1,000. It's not guaranteed. They think it is. Annuities, 401ks, where are they invested? They're invested in the stock market. The stock market every 7 years gets crushed since Black Monday, 1987. You know when that 7th year is? Next year. At the same time when cryptocurrency is on the down cycle itself. What does that mean? If you know what it means and you can protect your assets and move forward, you can double your portfolio.
Right.
Be careful and you do it right, 1-6% trade a month. Or you could leave it where it is as an investor, like Warren Buffett, and take a beating. He lost billions when COVID hit, right? He's preaching, hold on. For the people who held on with me since inception, look at how good they did. And yet at his last meeting, he thought that Bitcoin giving a 600% return was disgusting. How could anyone in their right mind think that if you work hard for your money and you put it to work for you and you got a 600% return, how is that not great? How are you not happy for them? Oh, I'm sorry, because you can't give those returns ever.
Right.
So to me, you asked me about closing words, and I got sidetracked because of something you said. I would say closing words would come down to 5 to 10 years from now. Everything you know through electronics is going to go through cryptocurrency, which, remember, all it is a secure layer on the internet. So it's going to go through all these different projects, all these different secure layers through the internet. All I would say is it's going to happen with or without you, but you have an opportunity to financially protect yourself and possibly make money on this. If you get in now because you're in the beginning of the acceptance phase, up till now, all we've been in is the rejection phase. But now that it's starting to be accepted everywhere, as they realize they can't stop it if they wanted to. It's impossible to stop. And that's the thing a lot of people can't wrap their minds around. Every single person that I know that did their due diligence in cryptocurrency got involved. I don't know one single person, guy, gal, kids, adults, doesn't matter the age, that did their due diligence, that understood what a couple of and I can give you the projects if you want. If you want, research Filecoin, research Polygon, research Chainlink, and the daddy of them all, believe it or not, it's not Bitcoin, it's Ethereum. Ethereum by market cap is going to destroy every company in the world eventually in terms of market cap. It's going to blow past Bitcoin and it's going to blow past Apple. And Apple is on the horizon of tremendous growth between India and China. Everyone needs smartphones with 5G, but we don't limit ourselves with our trading formula because it works for the stock market. We look at what Bitcoin triggers in the crypto world and what those cryptocurrencies trigger in the stock market. So we don't care where we make the money. There's no love affair for these companies. We make a trade to make money. And that's really what it comes down to. They're going to be using the technology. They have a choice as to whether or not they want to make money from it or just use it like they're using the technology now. They don't have to understand it. I think it's beneficial to learn a little bit about it. But you want to learn about each project you're going to put money towards. And that's what we do is, right? We read what they actually do. And people who aren't tech savvy can say, well, that makes sense to me. If Netflix has a choice to either go to cryptography or stay the way they are. If they don't, they go out of business, period. Just like they put Blockbuster out of business. But I already know because they sponsored down here in Miami. I live in South Florida, and they just sponsored some of the things going on down here. So Netflix is going to be all in. So they'll survive this. But a lot of companies that don't get involved quick enough, they're not going to survive. So in closing, I would say ask yourself, whether or not you think it's worth, I don't care if it's $100, but really more important than that, 8 hours of your time. I don't care if it's an hour here and an hour there, 8 hours of your time to learn a little bit about cryptocurrency. I know where you could learn for $150 in the next 30 days, as much as you're ever going to need to know to protect yourself and get involved. So it doesn't cost a lot, but the challenge is on yourself. Don't look back at this and say, woulda, shoulda, coulda. Because this is going to happen with or without any of us. It's just too big. But I'll close with that.
That's awesome. Joe, thank you so much for, I know you were busy today and I still pinned you down. So
Market open.
don't look at your watch because I don't want you
I
to.
know, I was trying not to look up and say market open.
Yeah, sorry about that.
Yeah, no
But
worries.
I'm going to probably put the links are on here wherever I have this video to go watch the training that you and I did, the one-on-one thing, because that was fantastic. Where you literally, I had my screen up and you walked me through looking at signals and stuff, and then that and people can see also where to get the training that you put together. It was so easy to understand. It was so easy to go through. So it was fantastic.
Kudos to you, because the reason I wanted you to keep your screen and you to move the cursor is you'll never forget that. If I do it and you watch me do it, there's a good chance you're going to forget it. But you did it. You
Right.
moved them over. You drew the trend lines, and you had control. And that's what it's all about. It's about you having control of your money, you protecting your asset. If everything started to go down right now, are your hands on the lever to protect yourself today?
Yeah.
They should be. We
And
can.
and the stuff that we graphed out a couple of days ago when we did that, or whatever it was, 4 or 5 days ago, it stayed where we thought it was going to go
Within the lines.
within the lines, which was
Crazy.
pretty, yeah,
It's
that's
crazy.
pretty spooky, to be honest. But when you get that revelation of, oh my gosh, I can actually see what's going on and control it and not be moved by the next YouTube video that comes out or the next headline that comes out or the clickbait that comes out, you can start to go, wow. And this is just another way to, advance that, wealth for the family kind of thing. So fantastic. Joe, thank you so much for being on here, man.
Yeah, but if you learn how to do that, then you're not going to think I have a crystal ball anymore.
Oh, I think you do. I still think you do, because you still go into things and go, hey, I've seen this. I'm like, man, that was amazing. And I look at a new company and a new opportunity. And, while everybody else is taking a beat and then these things are going down, you'll pull out that gem and you say, look over here. And people are crushing it. And that's what's been amazing. So thank you for being on here. I appreciate it. Okay.
It's my pleasure, man. Thanks for taking the time out. Listen, I love that you're staying on the forefront for the newbies, man. That's really where it's at, is helping the new people understand that they can take control.
Yeah.
And if they had issues in the past about certain things, it doesn't matter, because we point out the mindset as to how to get where you need to be by linking your subconscious with your goals.
Right.
So they're given the tools so that they can make a difference, and we're there to guide them and help. But thanks. Have a great day.
All right. Well, thanks, Joe. I appreciate it.
All right, Mike. Take care.
Thanks,
Bye,
guys, for jumping on here. Appreciate you guys.